I am mining investor and editor of Resource Stock Digest, Gerardo del Real, here with my partner, Mr. Nick Hodge, who of course is also an investor and the publisher of Daily Profit Cycle, amongst other things. This is the 281st episode of our weekly therapy session that we call Investing in Bizarro World. I'm laughing because there's lots going on. Markets are wonky. The world is wonky. Politics are wonky. It truly is a bizarro world. We're going to get to all of that. But first and foremost, as always, how are you, Senor Hodge? How goes you over in Washington State?
I am in Washington State. I am back in my home office. I'm doing well. It's been some 4 years since I was here, and everything is just as I left it. You probably haven't seen it because we weren't doing video podcasts back then. They were audio only. But I am well. I am by myself, as you are. My lovely bride and 3 young children are out of town for over a week, and so I'm doing the bachelor thing. Hence my 5 o'clock shadow here. No need to shave. How are you?
I'm lonely, man. I've been home alone for the last 4 days. And, those of you that know me know, my wife and I, we're also best friends and we do pretty much everything together. So her being gone in the evening time when I'm done with work just makes for a very, very boring, lonely existence. I was joking amongst myself because I'm the only one here that I have to joke with that this is probably the quietest I've ever been in my life. So it's been a bit of a lonely existence here the last 4 days. Got a lot done, but definitely looking forward to the wife and the kids getting back into town. Our oldest just got back here a day or two ago, but he works on opposite schedules because a lot of his clients come out of, China and Japan. And so we haven't been able to interact much. So yeah, long-winded way of saying I'm lonely, man. I'm happy the wife and the kids are coming back. And by the time you all watch this and then listen to this, I will be well accompanied and excited to have them here at home. But let's get into it. Go ahead, Nick.
I'm just saying I'm glad to keep you company.
I appreciate you, sir. I definitely needed the weekly therapy session this week. Let's get into it. Did we just live through like the quickest bear market in the history of bear markets? We had a 2-day sell-off that was, multi-layered. I think the easy, lazy thing to do, and you wrote about this. Actually, I wrote about it as well, but was to just blame it on the yen carry trade. We actually highlighted this 2 weeks ago before the sell-off, right? We talked about it on this podcast that, I was watching, that I was watching the yen, that was something to watch out for, that, it just watching the currencies, that was the thing that to me could break. And sure enough, it absolutely broke for a couple of days before, the Bill Dudleys of the world, former Federal Reserve member, started begging for 150 basis point cut here between now and year end, which would be very, very aggressive. And it was somewhat heartening to me to see the Guy Adamis of the world. I don't watch much mainstream financial news, but he had a great tweet and a great quote, and I reposted it on Twitter. He said, it's not the Fed's job to fucking save the stock market. That's not the mandate. There is a dual mandate. And keeping rich people rich, now I'm paraphrasing, keeping rich people rich isn't the mandate, right? So I say all that to say, look, now the last couple of days, the market's up over 500-600 points. And it feels like behind the scenes, there's been some intervention that and assurances have been made that all is well in paradise. Is that the impression that you get by the way the markets are acting?
It's complex. So that's how you started off. And it happens so fast that I can't imagine that there won't be at least some sort of aftershocks, even if they're smaller than the original earthquake. So the yen carry trade, I've been writing more about it for the Foundational Profits issue that will be out by the time you see this. But no one even knew what a carry trade was 2 weeks ago, right? And then, all the talking heads are talking about a carry trade. So I think we should start there because I actually had to read about it a bit myself. It's not like I had on a Japanese yen carry trade, right? So, the deal is that the yen was super cheap and super cheap to borrow because the interest rates had been pinned to zero for so long that institutions, take that essentially free money and then buy assets and other currency denominated assets, right? So they're dual profiting, right? If you can buy NVIDIA with yen that you then, you're profiting on the currency side and then you're profiting on the capital appreciation side. And then the Bank of Japan raised interest rates a quarter point, and it was no longer cheap to carry that currency. And so all the things purchased with that currency, which was a wide variety of things that had to be unwound, which is a term I'm sure you've heard. But there was a lot of other things, going on during that time. And so it was earnings season in the U.S., which means the companies are blacked out from buying back their stock, which has become a major source of liquidity in the markets over the past couple of years. The earnings weren't that great. If you remember the last time you and I recorded this, as we hit the record button, you were saying, Intel just reported and they're laying off 15% of their staff and whatever the other number was. So the other tech companies haven't been that bad, but they haven't been that great either, right? Certainly not what we've been accustomed to in the past quarters. And so, and the expectations super high, right? Given that, the market had hit 36 record highs, NVIDIA had been crushing it, these tech stocks have been crushing it. And so that was that. And then Mr. Buffett came out, who has a bit of influence, and said, by the way, I'm divesting half my Apple shares, right? Which is one of the Magnificent Seven. And so you have a rotation that goes on. And, we've been talking about the rotation as well. It's important to point out, because I've been saying, whether or not this cut in September is one and done, it's still a cut, right? And we were starting to see sectors do better, like utilities and real estate. And we were talking about in this podcast as well. And in Foundational Profits, they were allocating a larger percentage of their portfolio to those asset classes. So I still haven't given you a real answer. I mean, the VIX went all the way to 60. It's only been there in 2008 and 2020. So something real was going on. The question is it still going on? And so it's so soon that I don't have enough information to answer. What I would say is the VIX is still above 20. I can't imagine that entire carry trade was unwound. You do have slowing growth, obviously. U.S. growth 2.8% in the last quarter, but likely going to be 2% or below for the next coming quarters. I see the recession talk. It's hard to believe the recession talk, given that GDP was just 2.8% and it's going to be 1 point something for the next couple of quarters. You need negative GDP for it to have a recession. Nonetheless, sorry, I'm getting long-winded. The commodities the commodities smell something, right? I mean, JP Morgan says 35% chance of a recession. Goldman Sachs was saying 25%. But copper says, I'm going down 25% in a hurry. And oil is just sort of middling along. And so I say all that to say, I need more information. There's, the copper is right at that $4 level that it sort of needs to hold. So maybe next week we'll have some more direction. But right now I got to choose E, not enough information to answer.
I agree with you. I have a hard time believing that a system that is so fragile that a 25 basis point cut from the Bank of Japan, a system that's that fragile that leads to that kind of sell-off, I can't believe it heals in 2 days, right? And so I'm going to do my due diligence for you folks. I will visit my local strip club here, and I will check with the girls. They are my contrarian indicator. And I'll report back next week and let you know how the economy is faring. Because jokes aside, nightclubs, strip clubs, mistresses, side pieces, whether male or female, right? Whatever your preference is, great contrarian indicators and always seem to have their finger on the pulse of where the economy is headed, right? And so, jokes aside, if I get out there, if I hit a restaurant, if I get out with the wife once she makes it back, we'll most definitely check in with our local waiter, waitresses, business owners, and see what they're seeing and see what they're feeling. So you touched on gold. You touched on copper. I want to get into gold. Gold held beautifully despite what clearly was a global margin call, because all asset classes got hit. Bitcoin got decimated for a bit. Copper got crushed. Gold was crushed briefly. Silver dropped some 5-6%, and I think 8% over a 2-day time frame. Gold has bounced back beautifully over the past couple of days. Refuses to stay below the 2,400 mark at 24.25 as we speak. Silver had itself a day up over 3%, back above the 27.50 level. Copper is the one bellwether, the indicator, Dr. Copper. That's the one that I'm watching right now, that and the dollar index, because that's telling me that this recession threat is realer than most people give it credit for. And again, the Fed starts talking about cutting aggressively when rich people and asset owners start feeling the pinch. But I think the pinch is starting to become a whole heck of a lot of a serious pinch for the lower and middle class, which coincidentally is happening right near election time. And we'll talk election madness here in a little bit because you can't dodge it, right? We're 4 months or so away from the election. It's going to be a very, very consequential one, despite, regardless of who you vote for, it's going to have long-term consequences and not just socially, societally, but economically as well. So your thoughts on gold? What's that chart look like, Nick?
Well, I'll get to gold in a second. Make sure I do because I might forget. But I was thinking about the pinch and I was thinking about the consumer. And so, when things go down, it means more sellers than buyers, obviously. And so I was thinking about the rotation. I was thinking about, how the small group of stocks have been driving the market to record highs. And so if there is going to be some sort of rotation into different sectors that are going to lead, like staples and utilities and REITs and whatever else, materials, that it's going to take time for that to play through and for the indexes to be reweighted, right? Reconcentrated like they are now on the NVIDIAs and the Apples of the world, for example. And then I've been thinking a lot about duration, right? Because I said that the VIX went to 60 and that's only happened twice, 2008 and 2020. But there's been other times where it's been elevated much above 20 and 30, right? Like we had flashes of that in 2016 and flashes of that in 2018. And then, in 3 or 6 months, the VIX was, back below 20 and everything was hunky-dory again. And so that's the question that's in my mind now, right? Is how long are you going to get this elevated volatility? And you were talking about people feeling the pinch. When we see these, increasing headlines about recession, JP Morgan increases chance of a recession 35%. Some of the inputs that I've read, if you read the articles that are calling for that, aren't necessarily, obviously it ties to GDP a little bit, but there's components of GDP, right? And what they're talking about is the labor market has been weakening, and we see that, right? The unemployment rate has been ticking up a little bit, and we said that earnings were soft. So I guess getting back to that duration thing is, how long is the pinch going to last, and how many affluent are being affected, right? Is this a thing where we ran out of cash, it's the end of summer, and we got to sell a couple of equities and we're going to get back to it in September and October? Or is this a thing where there's going to be a more prolonged slowdown? And maybe this is an obvious question. There's going to be a more prolonged obvious slowdown, and assets need to be sold down to make up the middle ground. For the have-nots, I think I can tell you that we talk about this a lot, they're already pretty well at the bottom, right? The stimulus money has been long gone. I've talked about Spokane, the situation here. We know the homeless situation and the wealth disparity across the country. So anyway, I'm interested in the duration. I'm interested in how long the selling persists relative to that need for liquidity that you and I were just talking about. And then on the gold side, right? Gold's really separated itself now. You said it got thrashed. I'm not sure how thrashed it got. I see pretty strong support in the 2360-ish level now. Last week, when we recorded, you congratulated Gold Bugs on the July close. That was well above $2,400. I was reading David Erfley the other day, and he's writing about the December contract was flashing above $2,500 an ounce, and so it looks really good. And we haven't even got the rate cut yet, and so. Happy to be allocated to gold. Again, back to foundational profits, had some 13 or 14% of our portfolio in that, and some 20% in cash. So, 35% of the portfolio provides real buoyancy when the market is going down like it was over the past couple of days. So I was fortunate, and hopefully those readers appreciate being in that position. And I think gold looks good. I think you could see, gold go over $2,500 in a hurry, and wouldn't be surprising. I'm not saying that's going to happen, but I'm saying it most definitely could happen, and you shouldn't be surprised if it does happen. And then what got thrashed more was gold stocks. So we had been saying more in the past couple of weeks that, gold stocks were starting to reflect what they normally reflect when gold is doing what gold is doing. And that, they were finally starting to go up. I was saying the GDX was at 52-week highs. The GDXJ was at 52-week highs. And the earnings reports are starting to be real good. Like, I was reading Alamos today, and I control F'd the word record in the Alamos gold earnings. And it was, record revenue, record production, record. And it's similar with Agnico and Newmont and stuff, right? And yet, over the past week, those stocks have got thrown out with the bathwater. And so I think that's the opportunity is on the gold stock side. So looked at the levels on the GDXJ, which is, one of the positions that I like. And I think there's an opportunity there because we're in the middle of another quarter, as we always are, and gold is at $2,400, and that's going to be on the top line when the next time they come to report as well. So I think that's a good place to be. And silver is more industrial. I've been more enamored with and more impressed by gold, but still opportunity in silver. I think those two are tied pretty close together. And then if you want to scratch your head, or you want to go look at a chart, go look at palladium, which I think is at 8 or 9 year lows, like below 830 or 840 an ounce or something. So anyway, but gold looks really good.
I couldn't agree more. You know what else looks really good? It's an opportunity, but you may have to be patient to get the payoff. Is uranium equities. They're, his spot price is still 81.50, and they're trading as if the spot price was $20 a pound or something. And there's a severe disconnect there. I won't get too much into it because I wrote about it in Junior Resource Monthly, and that issue is just now going out to subscribers. But heck of an opportunity there if you know which stocks to pick. I caution you're going to have to be patient. I think we get gold to 2,500 before we see the uranium equities break higher. However, I will caution that when they break higher, it's going to be a quick 30-40% move to the upside because of how beaten down they've been here over the last several months. That disconnect can't continue. Either the spot price is going to have to really, really come down, or the uranium equities they're going to wake up from their slumber here in September. And I suspect that's the likely scenario with conference season kicking up, people getting back home from vacation, kids back in school, actually showing up at the office, actually placing some bids, and actually getting some real work done. Not that everybody's on vacation, obviously, but quite a few people are out there. Lack of liquidity makes for those moves to the downside. It makes for more drastic moves to the downside, I should say. Thoughts on uranium equities and the disconnect there?
Well, I was telling you a couple of weeks ago, I gave you good news and bad news. And the bad news was that the chart didn't look great on the URA ETF. And certainly that's broken down here amid the sell-off event that we've been discussing. So the equities are weak. And then you look at the uranium price, and it's still at $80, right? Double what it was in 2021 and quadruple what it was at the lows at 20 and below that, right? So $80 still healthy uranium price, and actually there's some support there on the chart. Those were the highs in 2020, 2021-ish. And so, support for the uranium spot price at 80, and it's back to time frame, right? So the bull market, the fundamentals are intact, and it's more of a stock pickers thing right now because there's only a handful of producers, and then I'm starting to see some of the explorers and the developers not trading in step, and so I think there's opportunities, and it comes back to duration. So yes, if you can buy the red here with a look to own these uranium stocks for another year or two, then I think there's some bargains out there for sure.
I absolutely agree. Copper bargains. What are your thoughts there? The chart, clearly shows that copper believes, as I mentioned, that we are in a recession or absolutely headed towards one. How bad is the technical damage on that copper chart with it breaking below 4 and being closer to 390 than $4 a pound right now?
Yeah, if it doesn't get back to 4 in a hurry, it's going to 350 or 340 ish. I don't know how fast it's going to get there, but it's sort of hanging out in no man's land right now. It needs to grab that $4 rail, or it's going to slip down. I was thinking about this while I was eating my lunch. What does that mean for the copper equities, right? And it's back to beating dogs in the junior sector, where even though the long-term fundamentals are robust, and even though copper is much higher than it was 2 years ago, it seems like whenever you get that pullback in the copper price, it's exacerbated or multiplied to the downside in the equities, and so. I just tell you how I'm playing it. I think I'm going to sell my ETF. So I was in the ETF back in February. I was telling you copper was going to run. China was opening up. So much has changed since February. This is how markets go. Right? But we were in so early that we're still up, and we have an opportunity to sell that and take some gains and see where that sort of plays out. And that's, I think, is a measure of prudence. And then that's what I was saying about duration. How long is this slowdown going to be? Are we able to hop back in at the same price in a couple of months? Or is it going to last longer than that? And so Well, not. And so here's what I was looking at today. Before I bought that ETF back in February, I was looking at some of the individual large copper producers, pure ones I'm talking about, like SCC, Southern Copper, FCX, things like that. And I missed them. I didn't get my chance to buy them because they started to run. And so I got in the ETFs, just grabbed the whole sector, and I'm still up on that. So I don't know if this is insightful or not, but I think what I'm going to do is just take my profits on the ETF, take a moment to get my bearings, see where it's going to play out, because I was looking at the SCCOs and the FCXs of the world, and they're back to where I could have bought them in February, right? So make a little jingle and have the chance to enter the pure play position at a price that I wanted to. What is that? 2 minus 8, 6 months ago, right? So that's how I'm sort of looking at it. And then I see good response to news. Like there's a company I follow put out a PEA today and was up 12%. So yeah, people are watching, and that's what I mean about, going back to the individual stocks as opposed to just, playing it as from a macro perspective. I don't know if that was insightful or not, but the chart is broken on copper. It needs to get back to 4.
It's stock picking time is what I think Nick is telling you, whether it's the uranium space, the copper space, the gold space, the silver space. You're going to have to know, what you're doing. I dig into that a little bit in the new issue of Junior Resource Monthly about allocation and time frames and where we are in the cycle, which companies are going to, capture the bulk of the profits first, and in which companies tend to offer the most leverage. Those are two different types of companies, and you have to know where you're at in the cycle, because if your portfolio that's meant to capture disproportionate gains through leverage, through the fact that they are tiny market caps and a bull market, tends to multiply the valuations rather quickly. If you're wondering why that part of your portfolio is not working right now, it's because we're not at that part of the cycle right now. We're at the part of the cycle where the producers are being rewarded. The companies with PEAs, like the one that was put out earlier today, damn good looking one too, by the way. Those companies are getting rewarded. Companies that are making discoveries, they're getting rewarded. We're at that point in the cycle. And so that's, again, a long-winded way of me telling companies that you have to add value. You can't just wait for gold to go to 3,000 and copper go to go to $6 a pound and uranium to go above 100 for your stock price to go higher. You have to be active. If you're a CEO, if you're a chairman of these companies, you have to be creative and find ways to get attention to your stock, to get attention to your company. And there has to be a plan in place that consists of more than let's just hope the price goes up and people like the sector again and we'll, change our name to whatever's the flavor of the month or the flavor of the year at the time. That's not the way to do business. And there's a couple of companies in my portfolio that aren't going to be there by year end if they continue to follow that approach. I need to see some activity.
Yes, and so that's sort of how I ended the commodity section in my monthly issue as well. It was know where you're at in the cycle, and then I recapped sort of where we are in the cycle. And it's that copper's long term fundamentally bullish, and I went back and I looked at the super cycle, right? The one that I think a new super cycle kicked off in 2020, and I've often compared that. We did a whole presentation about it to the last super cycle, which kicked off in sort of the early 90s. So I went and looked at that previous super cycle through the lens of the CRB commodity index from 1994 to when it peaked in 2008. And it had at least one 50% drawdown early in the cycle, and then at least 2, likely 3 subsequent 25% drawdowns. And that was inside of a quadrupling over that period, during a period where it outperformed the S&P over 3 times from 1994 to 2008. And so, again, trees don't grow to the sky, and 50% pullback inside entire commodity indexes during the super cycles. So a bit of context and perspective is always helpful, I find.
Yes, and context and perspective is important. So here's your context and perspective on the broader markets, folks. The Fed rate cut's about a month away. A month goes by pretty quickly. I looked today, I couldn't believe it was the 8th of August already. And so it's absolutely flying. September's right around the corner. September, October, November, December is going to look vastly different for in the commodity space specifically. But I think just overall, and a large part of that is going to be this election and the way it turns out. It's becoming more clear to me that Mr. Trump's approach is going to be calling people names, saying that the president should have more influence on monetary policy and dictate monetary policy, which I couldn't disagree more. I don't even like the Fed having say over monetary policy, let alone a president, any president from whichever party. I don't want, that being the case in a public way. We know they have influence behind the scenes. We know they ask for things. We know they often get things because they appoint some of the people that are making the decisions. But I absolutely need the checks and balances thing. And I think, Trump's campaign is saying, hey, look, my base likes it when they're told what to do. Not all people, but a lot. They like that I take charge. They like that I'm direct. They like that I call reporters stupid. And that's just the way I'm going to campaign. And I'd be curious to see, now that Mr. Tim Walz has been selected as the VP, a damn good selection. I cursed J.D. Vance by saying that 2 weeks ago he went on to have the worst week, I think, in first week in vice presidential nominee partner selections. So let's see how Mr. Tim Walz does in his first week. But I think it's a heck of a choice. I think it's exactly the balance that Kamala needed. I think it's exactly what the base needed. And again, I don't like that Ms. Harris is the candidate. He, to me, makes a better candidate than she does. But I don't get to make that decision. So it'll be curious to see how the debates go. It'll be really curious to see how the next several months go. But again, the last 4 months of the year are going to look very different than the first 8 have. And I'm curious what the betting odds say now. Mr. Trump just gave a speech. It consisted, again, of everything I just said, calling the media stupid and telling a reporter that was a stupid question and, the usual Trumpster stuff, right?
Yeah, well, that's interesting. They're both below 50%, with Michelle Obama now at 1%. So Donald Trump Donald Trump at 49%, Kamala 49%, Michelle Obama 1%, RFK less than 1%, and then it goes on to other candidates. Gosh, I lost my train of thought, so let me see if I can regain it. The betting market was wrong on the vice presidential candidate, which we talked about last week. It was saying that there was, I think, nearly 0.75% chance, 75% chance of it being the governor of Pennsylvania, Mr. Shapiro, especially because she had the rally scheduled in Philadelphia. And so I assumed that was a foregone conclusion, and then came out with Mr. Walz. So I'm not really familiar with him, as I tell you a lot. I'm kind of unplugged from politics, but I've done my cursory research. I've seen some of the things that he said, and at first glance, it seems like a good pick. Seems like he can hold his weight. Folksy is the word that's going around. Seems like he can give it back to J.D. Vance, and Trump was digging at them in a very Midwestern sleight of hand kind of way. Which I thought was funny and needed, given that you were mentioning Trump and the name calling. I was thinking that, man, like, what is this devolve? I mean, it's obviously been a dog and pony show for a while, but now everything and everyone just gets a nickname immediately. Like, it was the Kamala crash. Like, it was the Kamala crash? Really? I understand what you're doing and why you're doing it, but at some point, it gets long in the tooth or you jump the shark. So Tampon Tim and this and that, and yeah, they're cute, but they're not substantive at all. So anyway, what was the question?
The question was, what were the betting odds? And they're both under 50%. Michelle Obama now is at 1%. To be curious to see how that develops. But yeah, that was the question that I was interested in, the betting odds, for the simple fact that, again, Mr. Trump's goodwill after the very unfortunate assassination attempt is gone. I've never seen someone go from 70% likely to become president, and now it's under 49 and in losing ground. Again, I don't think he's doing himself any favors with voters like myself that are looking for a substantive discussion on where our country is headed, whether it's fiscal policy, whether it's our involvement in foreign wars, whether it's immigration, whether it's protecting our borders, whether it's stimulating our economy. Like, I haven't heard anything on that front. Like, I don't know. They asked him about abortion. He said he didn't think that was going to be a big issue in this election. I'm like, women's reproductive rights aren't just a left thing or a right thing. It's a woman's issue. I don't know if he's been advised that women have the right to vote now, and that a lot of them do, and that they exercise that right, especially when they're dismissed, right? And so I again, just in watching some of that speech, when I'm looking for substance, all I see is him alienating the groups that he knows or thinks that he doesn't need or knows that he doesn't cater to anyhow. And I think, again, there's some things there that need improvement if he's going to be the next president.
I'm not sure where to take that. It seems like they've obviously been the party of business for a while, but it seems like, it's all increasingly the party of Silicon Valley and venture capital. You talked about the monetary policy. Mr. Trump went to the Bitcoin conference. He's been, increasingly talking about Bitcoin. His son was tweeting that had a big announcement coming regarding cryptocurrency. It's like they got a coin drop coming or something here soon, the Trump coin or something. So, I'm not sure how it's going to go, and them both being below 50% in the betting odds is very interesting to me. Anyway,
agreed. Let's see what the next few days, weeks, months bring. It's going to be very interesting. Go ahead, Nick. You had a thought?
No, I was going to say so much has transpired, and I was going to make a joke, but then you started talking about reproductive rights, and I didn't want to make it, so I let a little bit of time elapse, and now I'll make the joke. I was saying that so much had happened that for my monthly issue, I almost was just going to rewrite "We Didn't Start the Fire" from Billy Joel, because you could just do like Matthew Crooks, J.D. Vance, Posey Harris has a chance. I mean, there's just like so much with the. We were talking about it last week with Iran, and we haven't even talked about Venezuela. Anyway, there was just so much going on there that you had on the list a couple of weeks ago, Biden prisoner release, right? We never even talked about that. I think I saw a half a headline about that, and it was poof, gone from like whatever is going on out there. So there's just been so much happening and it's seemingly on fast forward. And so good luck to these people voting in November on who they choose.
Yeah,
seemingly no confidence in anybody, right? And that's another point. Sorry for the ramble now. Talk about lack of faith in institutions, man. The betting odds say each of the main candidates got less than a 50% chance of winning.
It's interesting, crazy times out there, people, is all I can say. I would encourage everyone to focus inward a little bit more, right? And to focus on the things you have control over, and focus on family, and focus on yourselves and your health, and those things. And again, I would also encourage that as we get closer to voting time, that if you're going to disagree with your fellow citizen, neighbor, person, whoever, just do so in a civil way, man. We don't have to have the same ideas, have the same thoughts, come from the same places, or want to go to the same places. And we don't even have to go together, but we should be able to do those things civilly, even if they're different things, and even if we want different things for different reasons. So I just encourage civility here as we get closer to the election cycle. I guarantee you, again, that behind the scenes, most of these politicians don't care about you as an individual or your family anyway, right? So touching on family, I know you wanted to talk about food, and you're the perfect person for me to have a discussion with about food and how you feed your family, because of how you feed your family, right? Would you like to share, for those of you not aware, Mr. Hodge is very much an outdoorsman, and has 43 acres or so to his disposal, and has all sorts of just neat interactions with nature, and as do his kids, and they're growing up in an environment that I think is becoming less common here in America. So you want to speak to some of that, how much you want to share there, Nick, but you want to speak to some of that, because I do think it's unique, definitely amongst my friend set, the experiences that your kids get to have.
Yeah, and I wanted to ask you how you feed your family as well. So you were just talking about, how we have more in common than we think, and, speaking to your fellow man and et cetera. So, I'm also interested in how you go about doing things. And that's one of the things I want to do with this podcast, is increasingly open up other angles of ourselves, and in addition to just the market side of things. So, and food is not something that's foreign to me or this podcast or these pages. I've written about food for a while. One of the things I wrote about early in my career was water, and that's obviously vitally important to agriculture. And, I've made investments in food and food adjacent technologies over the years, whether that's booze or, ag or commodity or whatever it is. So, and plus I like to eat, obviously, and then I like to drink as well. So, and I grew up on sort of a farmette, and I always had a farm, and a lot here, but I viewed the trends as changing. This is something that Mr. Dines wrote about as well. He would always have snippets about health and food and how those trends were changing and evolving. And there was ultimately going to be a backlash against the super processed, super dyed, chemical ag industrial complex, right? And that's evolving. So we've embraced that. I mean, I'm not the healthiest eater. I obviously, take in plenty of calories and sugar, but I don't need a ton of processed food, and I try to buy high quality food when I can, and that's where the trend is going. One of the things I wanted to talk about. So let me answer your question, and then maybe we can talk about a couple of other things before we wrap up in the food industry. So, how do we feed our families? So on the meat side, we have a relationship with a rancher that grows a bunch of things: cows, sheep, chickens, pigs. And that's where we get our pork and our beef. We'll buy either half a cow or a whole pig, typically annually. I actually got to pick that up this month. And that's normally where almost, I'd say, 80% of our meat comes from. We eat a lot of geese and ducks that I kill. For a year or so, we ate on an elk that I killed. That's now gone, and my kids are asking for another one. So I guess I'll have to go kill another elk. But we do that. We have chickens that provide, I don't know, half the eggs that we eat, maybe. We have a duck too, and we eat a lot of duck eggs. And then we didn't have a huge garden this year, but for the past couple of years, we've had a garden. And then I really did want to talk about not just clean eating stuff. So I mean, the stuff that comes from the ranch is awesome. I mean, we know the family; they drive the meat here from Oregon. I mean, it's really good stuff, right? So. Not everyone can do that, and maybe not everyone wants to do that, but we do that because back to that, agricultural, industrial complex and some of the chemicals and certainly some of the things that in the chicken breast, for example. So anyway, so for the other stuff, and this is what I wanted to get to, we make a Costco order, typically once every 2 or 3 weeks, a big Costco order for everything else, right? The milk, the staples, the flour, the snacks, the kids stuff for kids' lunches, whatever it is, oil, vinegar, etc. on down the line. And bulk produce, right? Like packs of berries for the kids, whatever other produce that's good at Costco. And then we plug the holes in between, right? With either short trips to the local grocery store if we need it, or, we try to go to my wife goes to the farmer's market during the summer every weekend for the produce. So that's sort of how we do it. I have a pretty good handle on where the money goes, how much we spend at Costco, how much we spend at the other grocery stores. And I guess last thing, if you just a little more inside baseball, we try to eat organic as much as we can, especially on the fruit. So on the fruit and the milk, we buy organic, but we're not like super crazy about it. Like we don't like the packaged products and some produce, like we'll overlook it or whatever. It's not like, again, we're Nazis about it. So that's sort of us. That's how we feed our family. That's how we eat. How do you guys do it?
We try to we're very health conscious, right? So I could tell you just a quick anecdotal story with my youngest. He's 15 years old and probably the most responsible 15-year-old I've ever met, right? We have 3 great kids. We lucked out with all 3 boys, but our 15-year-old cooks breakfast for us every morning. And so he loves to cook. And so we hired him, we told him, hey, look, you want a part-time job? Cook us breakfast every morning with the exception of weekends, right? And so makes breakfast for us every morning. He makes it a point to always include greens, to always include some fruits. And, as far as the meat and the seafood, try to keep it organic. I'm definitely, unlike you, I'm not a hunter. So I'm at local HEB, I'm at the grocery store, shopping, but definitely conscious and aware of taking in as few processed foods, as little sugar, unhealthy sugars. Try to get most of our sugars from fruit. And Tito's shots as it would be, but Tito's club sodas, right? But outside of that, we just try to be really aware to the point where my son's got an app, and I encourage everybody to check this app out. It's called Yuka, I want to say CA. I could be off on that, maybe 2 C's. Anyhow, you get this. You take your phone and you can pick up anything at the store and just take a picture of it, and it will immediately tell you. It'll give you a health score. And the scores are generated by 19 independent nutritionists that, have put together this amazing app. And you can do it with everything. You could do it on toothpaste. You could do it on your meats. You could do it on your fruits. You could do it on any sports drink, protein shake. It'll give you the health score and it'll break down exactly what's in there. It'll tell you the positives. It'll tell you the negatives in there. and how much how many additives and how processed whatever you're looking at is. It works for toothpaste. It works for cosmetics. It works for hair products. Brilliant app, super helpful. We're on the free trial thing. We don't pay anything for it, but it's been extremely helpful to us in really cutting down some of the stuff that we assumed was healthy. And, we just weren't as aware on some of those additives or preservatives that were keeping that stuff on the shelf a little bit longer that it otherwise naturally would stay on the shelves for, right? So let's say my 15-year-old is a kind of a good indicator of how healthy we try to be. Exercise is a big thing for me. As you know, I try to work out, twice a day, 5 days a week. I start my morning with a couple of a 2-mile jog, and, then have lunch. And by 2 p.m., I'm trying to get, my gym workout in, whether that's boxing, whether that's lifting, whatever that is, and then finish that up with another 2-mile walk/run. So that's a Monday through Friday thing for me. It's not just a health thing. It's also very therapeutic for me. I'm a little bit high strung and a little bit hyper by nature, in case you guys haven't noticed. And that really kind of settles me and calms me a little bit. So, that's kind of our approach to nutrition and exercise. And, our youngest, like the rest of our family, but especially him, has really taken to that. He boxes as well and works out every day, gets his jogs in, eats healthy. And that's our approach here at home.
Mm-hmm. I love a good HEB. Does yours have the smoked meats and stuff outside too?
Oh, absolutely. Absolutely.
Hell yeah.
HEB
awesome.
is the Texas version of the best grocery store anybody's ever been in, folks. So it stands for here, good. Everything's better. And we absolutely swear by it. And we're fortunate enough to have one, 5 minutes away from the house. So that makes things a whole heck of a lot easier. So yeah, that's it. I would say the most unhealthy thing we do is, we do enjoy dining out. And so, you know, Austin has got some amazing dining options, amazing food options, Round Rock, Georgetown as well. And that's probably the least healthy thing that we do is we do like to dine out a few times a week, for sure. Get out, have a date night, hang out with friends. So,
No, ain't nothing wrong with that. No, I just, I like the food scene, all the aspects of it really. And there's a couple of stories that caught my eye recently that I wanted to weave into this podcast. And I know we're getting close to time to wrap up, so let me get those out real quick. And one of them had to do with grocery store trends, right? We've long known that the good stuff is on the periphery, right? And on the outside of the grocery store, the dairy and the meat and the produce, et cetera. And then all the processed foods are in the middle aisles. So the long-standing advice has been to do as much shopping on the outer rim of the grocery store as you can, as opposed to getting into those processed food aisles. And that's changing now, right? As people go towards cleaner eating. We were just talking about eating less processed foods. Your family does it as well. So grocery stores now are shrinking the amount of space in the center aisles and adding more space to the periphery of the store. And this is being led, one, by consumer behaviors, buying more produce and less processed foods. And now the consumer companies are chasing that trend, right?
Sure.
And so the story that caught my eye was Pepsi, who is famous for, this is Frito-Lay's, right? This is chips and Doritos and, Doritos Locos Tacos and all that shit, right?
Doritos,
Pepsi,
Locos,
right?
Tacos. Mockery of my fucking culture and ethnicity. But anyhow, I digress.
Garbage, right? So they just had earnings and they were saying everything that we sort of just said, right? The consumer trend is changing. We're trying to clean up our act and offer more healthy stuff. But as a result, they need the sort of grocery store to change. So one of the examples was Lunchables. You know what Lunchables are, right?
Sure.
They buy the things you buy to put in the kids' lunch that aren't really that healthy, right? Some processed meat and cheese and then a cracker and then some snack and then maybe a processed drink.
Oh,
right?
yeah. I grew up so broke. That was fancy.
I had some Lunchables too. Believe me, I know.
I felt fancy when we had Lunchables in the household.
I didn't say they weren't fancy. I said they weren't healthy. So anyway, those things are shelf stable, right? You can put those in the hot dog aisle, and then they can last for, I think the article said 150 days or something, right? That shows you how fresh and non-preserved they are, right? So they're testing out a version of Lunchables that is only going to be shelf stable for 10 to 14 days with fresher ingredients and things. And so that's like the Lunchable, like the quintessential processed cheese Lunchable is now trying to go to a 10 to 14 thing. And that'll have to be, in some sort of fresh food area of the grocery store. And so anyway, that was just one example because I like to keep my eye on those trends. And then the other thing, is salmon, which I know I've talked about on this podcast before in a couple of ways, either catching them or them being released from their pens and breeding with other things. And I think I've also mentioned the sea lice on this podcast.
Yeah.
The sea lice are getting really bad. So bad that the sea lice are now like eating into the margins of the farmed salmon producers, Atlantic salmon. So these are lice, just like you would get lice in your head, but they're sea lice. They're, what do you call it? Gosh, my brain's not working right now. Anyway, they attach and leach themselves onto you. They can destroy your flesh. They suck the blood out of the fish, and they need to be controlled. So a parasite is what it is. It's a parasitic relationship. Anyway, they've been trying to control these things, right? And I love the measures that the industry takes to do stuff. I've talked about some of this stuff in the past. So what are we doing? We've engineered now a fish. There's a fish called a lumpfish that likes to eat these lice. And so but they also like to eat the food that the farmers feed the salmon. And so it's not a great solution because if they're eating the food, then they're also eating into the margin, right? Because that food needs to go to the salmon.
Sure.
So what they're doing now is they're bioengineering the fish, the lumpfish, so they don't like the fish food, but instead prefer to eat just the lice. So we're bioengineering fish to be predaceous on these sea lice, which I don't know what the long-term implications of that are, but I just thought it was worth pointing out there some of the solutions that are being taken to feed mankind. And then the other thing we're doing, and you'll have to put on your memory hat there and go back to Dr. Evil, is we're shooting these lice with lasers. So they have underwater lasers that they are shooting the sea lice with. And this one farm blasts like 250,000 laser blasts a day, just shooting lasers underwater, trying to shoot these sea lice before they attach to the salmon. So literally underwater laser wars going on out there to try to keep y'all fed with these farm salmon. It's pretty interesting. Anyway, I thought it was interesting.
Supply and demand, folks. If you buy enough of the good stuff, the grocery stores will start stocking it. If you do enough of the good things for yourself, the powers that be, the corporations, will reward you by providing more of those services. So, yeah, just because I say we should all get along doesn't mean don't be vocal about, the things that are healthy for you and nutritious for you and the options that you want, whether it's your local butcher shop not carrying something that, you really enjoy, or your local deli not having, a product that you really enjoy. It's good to be proactive about that stuff and, be careful with the stuff that you put in your body. So you only get one of these lives and then one of these body things that we can remember one life at a time anyhow. I still tend to think we're in a simulation, but that's another discussion for another day. So look, make the most of the one you got, right? And try to take good care of it. That would be my public service announcement. My other public service announcement is to go to dailyprofitcycle.com/subscribe for all the editors from Daily Profit Cycle. I could go on, but you know the names by now. Talented group of editors, editorials every day, lots of good content. It's absolutely free, completely independent. Encourage y'all to go over there and get our thoughts. What are you watching for this week, Mr. Hodge?
We need some closure, man. I'm interested to see how elevated the VIX stays and for how long. We'll talk to you again before this, but NVIDIA hasn't even reported earnings yet. And on some days, that's like 20 to 30% of the market. So that's super important. And the date for that is, I believe, August 28th. So when I said that there was still going to be, some potential aftershocks, that's like one of the things that could lead to them, right? Because a softening of NVIDIA revenue, a softening of NVIDIA earnings, I can imagine would not be, well taken on the stock market, given how much of the S&P it's responsible for. So volatility and ongoing earnings season for me.
I like it. I'm watching the same. I'm actually watching as I usually do, right? It's why we kind of caught this yen carry trade thing a few weeks early before anybody even, noted it or started talking about it. But I'm definitely watching the foreign exchange market, the currency markets. I'm watching to see what the dollar does in relation to some of the other currencies. And look, central banks are starting to get aggressive again. On the cut side, they're getting more dovish. That's a global phenomenon. That's not a U.S.-centric phenomenon. So I'm really curious to see the interaction there between the currencies. I think it's going to elevate and escalate on the volatility side throughout the rest of the year. Curious to see where that lands. Anything else to get off your chest, Mr. Hodge? I know we're running on almost 50 minutes. We could probably go another 50 if we really wanted to, but I know that you have issues to write, and as do I, things to catch up on interviews to do and people to check up on and deals to vet as always? Anything else that you're dying to get off your chest?
No, just that at one point during the sell-off, the market was pricing in 10 rate cuts over the next 12 months. And so if you don't think that those haves want them for their asset prices to go up, then, I got a bridge to sell you. Those folks are wanting their rate cuts, and then they are likely going to get them.
I absolutely agree 100% with everything you just said. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 281st episode of our weekly therapy session that we call Investing in Bizarro World. It's very much that, folks. Take care of each other. Take care of yourselves. Have a great week. Enjoy what's left of your summer before the kids get back in school and you get back on the grind. Take care out there, everyone.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.